Welcome back to Module 1, Lesson 3, where today we're going to talk about the different types of markets that you can trade in the financial markets to become a financially free trader and be able to travel the world, take care of your family, and provide for those who you love. Let's get into it. Now, this is just an overview of the different market types. I will dive into each one of these later on in this video, but for now, the 5 different market types is stocks, Forex, futures, options, and crypto. These financial markets are different ways to trade assets, and each has unique rules, risk, and opportunities in each and every one. That's why it is very beneficial for you as a trader to understand each and every one of these. And maybe one doesn't work for you, but the other one does. So, some quick advice what I would give you as a trader, trade all of them and then figure out which ones you like the most. That's what I would say. But also, when you're trading, make sure you're focused on just one market type. Don't be focused on Forex and futures, and then futures and crypto, or crypto the options and stocks. Like, make sure you are trading each and every one the right way. And if you are going to be trading multiple different ones, that's fine. That is perfectly fine. Just make sure you're extremely focused on what you're doing at hand. Now, stocks. You can trade stocks. You can invest in stocks. You can hold long term. You can hold for 10 years, 20 years, 5 years for 1 second. Right. But stocks at the very gist of it is ownership in a company. So if you want to own some Apple, you go buy some Apple shares, boom, now you own some of Apple. Simple as that. The price depends on company performance and investor demand, traded on exchanges like the New York Stock Exchange and the NASDAQ. So like we said, the Apple stock, the Tesla stock, they're long-term growth and dividends, right? If you don't know what dividends are, I've made a video about this before on my channel, but dividends basically pay you out monthly, just like owning a rental house does. They pay you out monthly. And the cons to this can be volatile, but that's pretty much all markets. Everything can be volatile. Forex, you trade one currency for another. Prices change based on interest rates, news, and global events. Largest market in the world by daily volume. So it's the largest market in the world by daily volume. So meaning it's larger than crypto, futures, options, stocks. It's the largest of them all. Now, the pros is highly liquid and it's 24-hour market. So this is probably good for you if you work a 9 to 5 and you don't have time. Finding the Forex pair and the time frames to trade in for this Forex pair allows you more opportunity to get into trading and set that financially free for yourself. And then leverage can increase your risk. But like we say, guys, risk, there is no success without taking on some risk. Futures. Agreement to buy or sell an asset at a future date, often used for commodities or indexes. So example, the oil futures or the S&P 500 futures. There's even Asia futures. There's the NASDAQ futures. There's all types of different futures that you could trade. The pros is hedging and speculation, and the cons, they can expire worthless if the market moves wrong. Now, options. Options. Right to buy or sell an asset at a set price. Now, this was the very first thing that I personally started trading, so I'm kind of biased towards these things. I think they're a great instrument to be able to learn how to trade. It just takes capital, and that's really it. But once you understand the rules and the Greeks behind them, you'll be okay. You'll be okay. So now the pros, you can control large positions with less capital. So for instance, say you wanted to, you knew you want to get in on the on the Apple bull run, right? You want to get in on it because you know price is going up, but you don't have enough capital to buy the share. What you would do is then go buy an option, which gives you as the option holder the right, but not the obligation to trade up to 100 shares of the stock. So you don't have the large capital, but you can buy the option contract, which allows you to control large positions with less capital. But with that being said, there's time decay, which can reduce the value if you're not careful. Now, crypto is a very interesting one because it's new, it's relatively new, and there's a lot of skepticism about crypto and this and that. But regardless, it's here. We can trade it, so we're going to talk about it. So digital assets like Bitcoin and Ethereum are traded on crypto exchanges 24/7, meaning they do not close. It's constantly a thing that we can trade as traders. It's highly volatile and high potential profit, extremely volatile and less regulated. So because it's highly volatile, it means there's extreme volatility in it, and it's less regulated. So it's not being shut down or anything. It's not ran by the government or anybody for now. We'll see. Now, the key takeaways from this video is that I want you to understand what the stocks are, which is owning company, which is ownership in a company, the Forex, which is your currency exchange, your futures, where you buy, sell agreements like oil, NASDAQ, SPY, options, the right to trade at set prices, meaning if you don't have enough capital to trade to full shares or be in the position, you can hold a position with small amounts of capital. Then crypto are digital assets and it's high volatility. And like I said later on in this video or early on in this video, focus on one market, but I would recommend trading in every single one of these to figure out which one kind of fits for you and your trading style.